in the meanwhile is trading around that $1,200 per ounce as investors gauge the impact of Fed's QE tapering. Remember, gold fell 3% last week after the Fed said that the U.S. economy was strong enough to scale back its massive bond buying stimulus. On your screens, there is a decline coming in for the Indian gold and silver prices too. I look back at 2013 then on what has been happening in case of the gold and silver prices and what should be expected from 2014. For that, let's get in Prithviraj Kothari from Riddhi Siddhi Bullion. Mr. Kothari, hi, welcome to the show. A look back first at the year that's gone by, where the gold prices have declined 29% globally, 12% down in the Indian markets as well. What's your sense on the prices and the policies that have had an impact on it?
I think it's a too difficult year. If you see the customs duty hike 3 or 4 times, and a lot of restrictions should be there thereafter the 80-20. So basically the years are too nervous here, because if you see the rate side, when the Indian markets are not in the international market of buying, automatically the international market should be the drop down. This is the main effect on the international market. If you see when it's a policy announced on 22nd jewelry, the price is almost 1,500 and something. Now it's almost 1,200. So it's more effect on the each and every jewelers have their lot of the expanding business, and everywhere their showroom. The now lack of consignment, shortfall of a consignment. The artisans are all the unemployment figures are going high because there is no consignment for an exporter also. So it's a lots of difficulty now happening in last 2-3 months. So still I think now yesterday if you heard the statement of the Governor Sahab, they said it will take time for the policy should be declared. I think it's a 2-3 months is still going same like that.
We all are waiting for that, Mr. Kothari. But even as the government has put a lot of curbs, instances of smuggling have gone up. How do you think the government is looking into it, and what have you seen that impacting the industry in the meanwhile?
Two things is there. If you see the bank rates are, it says suppose it's a bank rate is the 62 rupees. The unofficially dollar rate is the 64.50. Why? Because of the gold coming from the NRA channel. If you 1 kilo NRA brought gold in India, after paying the customs duty and after paying the difference between the overseas and here, they still get 1.5 lakh rupees profit. So each and every NRA from the Gulf side, they bring 1 kilo of gold. Any passenger they can coming from, they can wear 40 grams of a gold, approximately 1 lakh rupees. So they get almost 10% difference, because the market, international market compared to the domestic market is almost 20% difference. So if it's happened, then I think it's a grey market should be more and more coming in the market. After the NRA coming 1.5 lakh, if you see how many flights are coming and how many passengers coming from the Gulf side. I'm talking only of the Gulf side. And I think government should reduce custom duty to 10% to the directly 6%. There it should be stop out. If we see the lot of jewelry also coming in India, if we pay custom duty of 16.442%, still we get benefits. And if if imported jewelry comes in the market is a lot of huge quantity, then the domestic market should be wiped out. So each and everything should be very difficult to be there. If a grey market is coming, lot of goods are coming in the market, then it's a difference between the grey market and the bank costing. It's too different. The grey market and the billing, the rate should be the difference always be.
Well, that's about the domestic markets, Mr. Kothari, but the Fed tapering has put further pressure on the prices. How do you see the prices going forward now?
If you say that India is the main buyer of a 950 tons of a gold, is the physical one-way side. If you compare with the China is a lot of buying and selling is there. But India is only the one-side buyer, and basically the 950 tons, instead of that we are only buying 5 or 10 tons in a month instead of 70 or 80 tons or 100 tons. So it's all effect in the international market. If you see the international market price, if India is still not bringing the goods or bought the gold or open the policy, the market price should be crashes to below $1,000, because if you see the physical side, only the Gulf, Middle East and the India and Asia and China is the buyer. And if you see the ETF also liquidation is there, constantly the liquidation is still there. So I think gold prices should be dropped down, because no one is the buyer, physical side buyer.
Well, as you said, Mr. Kothari, that perhaps it would take a couple of months, even 3 months before the RBI governor and the government can start rolling back those policies that they brought in 2013. What kind of policy stand do you see being taken in 2014 then?
No, if it's okay, then current account deficit, we are also very worried about the current account deficit. But simultaneously, government have to see everything. The gold depository scheme, they have to, we have to, government have to say the parallel something, which can gold come to the easy way to be available everyone by the jeweler. Now it's very difficult to the jewelers. If you want to, if you jewelers have a lot of export order, but they can't get the gold. The gold replenishment they can't get. It's a huge problem of a gold replenishment. If we get bought in the local market and export, we lose money because the local market is almost $125 is a premium. So no one can export the goods. So if you see the data, current account deficit figures are dropped down. The export and import figure both are dropped down because of the lack of availability in the market for export purpose. No one bank have a consignment for export. No one bank replenishment for the gold. No one easy clear no one consignment clear by easy by the customs department. So each and everything hurdle should be there. So the drop down with the both import also drop down as well as the export also drop down.
Fair point. And a final question, Mr. Kothari, then. Do you see Asia buying continuing? As you said, China, India, and much of the Asian countries have seen strong physical buying coming in, while the developed world really has been selling into ETFs or even futures. The funds also have redeemed holdings in case of gold. How do you look at balancing both of these?
If you see in the India, the demand is still is the huge demand there, but globally you see the ETF or liquidation. If you see the SBDR, the liquidation constantly there. Now is almost the 800 tons is there. If you see in the globally, whole globally, only the China is the main buyer and Middle East, and this is happening because of the India 10% increase, the duty increasing, and lot of buying from the neighbor country like Bangladesh. If you see the import, their imports should be the higher side, like Bangladesh, like Pakistan, Sri Lanka, Dubai, everywhere. If you see that, and also the Singapore, because there is a huge buying there because they are all supporting with the Indian market because there is a lack of the shortfall of a consignment. If you see the market are like that, and if the international market, I think should be on the around $1,150 to $1,200 maybe supporting there. I think Indian import should be in the official channel should be around 200 tons or maybe 250 or 300 tons. But unofficially like Bangladesh, Pakistan, their import figures should be huge. So ultimately the unofficial channel should be, the grey market should be more active.
Thank you so much, Mr. Kothari, for joining us and giving us your sense. So that's the view on gold from the industry there, 1150 to 1200, perhaps seen as an immediate support level. On your screens, of course, it's more than 0.5% of a decline for the global markets.